Fintech in Africa is unique. Now, even though Africa is considered one of the least developed and often misrepresented regions in the world, when it comes to the creation of innovative new wave financial products and services, Africa has shown itself to be quite a leader. The African Fintech sector is now estimated to be the fastest growing startup sector on the continent, with numerous reports from the likes of McKinsey, KPMG, and Deloitte projecting the African fintech industry to be worth hundreds of billions of dollars by 2025. Some of such revolutionary products from innovative African fintechs are M-Pesa. That was launched in Kenya in 2007, which allows users to send and receive money, pay bills, and have access to financial services using their mobile phone. This has since expanded to numerous countries across the continent. There's Flutterwave, which is a payment technology company that provides infrastructure to allow businesses to accept and process payments from customers across Africa. There's Jumo, that's leveraging alternative data and machine learning algorithms to provide financial services like microloans, savings products to people who were financially excluded and have since served over 20 million customers on the continent. Or Paystack, that provides a payment processing platform for businesses in Africa. There's also Chipper Cash, which is a mobile-based cross-border payment platform that operates in several countries, allowing users to send and receive money across borders on their mobile phones. All of these fintechs are blazing the trail in Africa and have achieved exceptional success in one of the world's toughest markets to crack. So in this video, I'm going to talk about some of the lessons that banks and fintechs globally can learn from the success of African fintechs. Hello friends, welcome back to the channel. My name is Jeremy, and if you're new here and haven't yet subscribed, please consider doing so because on this channel I speak about fintech, digital transformation, personal and career development. There are several factors that make the distribution of financial services tough in Africa. Now, according to the Global Fintechs report, about 57% of adults in Africa were unbanked as of 2021. We still have almost a third of the population that's semi-literate at best, and the infrastructure, or rather lack thereof, makes it difficult to reach people living in peri-urban and rural areas of the continent. Yet, despite all these, fintech firms have found a way to overcome these peculiar challenges. Now, even though it must be acknowledged that there are challenges globally as well as it relates to financial services, I believe that our challenges in Africa are tougher to overcome and we face a lot more roadblocks to financial inclusion. So let's start by listing a few of the differences between fintech in the West versus fintech in Africa. The first is market size and maturity. Now, Western fintech markets are typically more mature and have a larger customer base with well-established technology, infrastructure, and regulatory framework. Now, African fintech markets are relatively new with nascent infrastructure and regulation, but are growing rapidly due to the untapped potential and large unbanked population. Next is the customer needs. In the West, fintech often serves customers who already have access to traditional banking services and rather seeks to offer customers convenient and innovative solutions for the everyday financial tasks that they already carry out. In Africa, on the other hand, fintech often provides basic financial services to those who are unbanked or underserved by traditional banks and financial institutions, with the goal to fill the critical gap in financial access. Next is payment systems. Western fintech companies often focus on payment systems and services such as mobile wallets, peer-to-peer transfers, and e-commerce payment platforms, again because the infrastructure exists. In Africa, mobile money and digital payments are more widely adopted, so we can allow for financial transactions even in rural areas without access to traditional banking services. Next is the regulatory environment. The regulatory environment in the West is more established with clear rules and guidelines for fintech companies. In Africa, regulation is still developing and regulators are now beginning to understand the balance of flexibility and oversight that is required to create a supportive regulatory framework to ensure the growth and stability of the fintech industry locally. Next is investment. Now, Western fintech companies have access to more mature and well-established investment ecosystem with significant venture capital and private equity investment, whereas African fintech companies have less access to local investment generally. But there is now growing interest from international investors to participate in this rapidly growing market. So those are some of the key differences between fintech in the West and fintech in Africa. Yet despite some of these evident challenges present on the continent, Africa is still set to leapfrog technology. Now, what this description refers to is the fact that African countries have the opportunity to bypass bypass traditional technological development paths and jump straight to the most advanced technologies rather than gradually adopting each new technology as it becomes available. So for example, in many African countries, traditional banking services and infrastructure are limited, making it difficult for many people to access financial services such as savings, loans, and remittances. However, mobile payment solutions like M-Pesa in Kenya and MTN Mobile Money in Ghana have emerged to fill this gap. They allow people to transfer money, pay bills, and access other financial services directly from their mobile phone. And there are a number of reasons why African fintechs are able to do this. Firstly, the lack of legacy systems. Many African countries do not have well-established infrastructure or legacy systems, as we previously mentioned, which means they can bypass the costs and challenges of upgrading and integrating older technologies, unlike the West, who have to recognize all those costs as sunk costs. Secondly is our mobile-first approach. Africa has one of the largest and fastest growing mobile phone markets in the world, with many people relying on mobile phones as their primary means of accessing the internet and financial services, which actually leads to the next point, which is our ability to embrace technology. African countries and businesses are quick to adopt and embrace new technologies that solve our peculiar economic and social problems. So you find mobile payments, blockchain, and AI solutions spreading quickly in fintech products that address issues of access and inclusion on the continent. We also have innovative solutions. African entrepreneurs and African fintech companies understand that our problem is unique, and in that regard, we have to find unique solutions for ourselves rather than trying to copy and paste from the West. Hence, you'll find that African fintech solutions are more innovative and distinctively tailored for the target market, which is Africa. And lastly, there has been a surge in investments into African fintech startups, with many international investors recognizing the potential of the market. The growth of the African fintech industry is driven by a combination of favorable government policies, favorable market conditions, and the need for innovative financial solutions in the region. Even with the economic challenges and VC funding crunch globally, African fintechs still managed to rake in more in 2022 than they did in 2021. Now, speaking of investments, one of the fintech sectors in Africa that attracts the most funding is mobile payments and digital wallets. Now, this is due to a number of factors, such as the fact that the large and growing market represents a significant opportunity for fintech companies offering mobile payment solutions. The mobile phone penetration rate in Africa is upwards of 85%, meaning that 85% of the population owns a phone, which makes it one of the largest and fastest growing mobile phone markets in the world. Now, this high mobile phone penetration means that fintech companies can leverage the widespread use of mobile phones to reach and serve customers who have limited access to traditional banking services, and it also highlights the potential of fintech to drive financial inclusion on the continent. There is also the ease of use of mobile payment solutions in Africa. Now, African fintech solutions focus on convenience, ubiquity, and are typically easier to use than traditional banking services, making them the popular choice for many people in Africa. And then there's innovation, which we've highlighted already. Tailor-made products such as digital wallet, P2P payments, mobile-based loans, and affordable cross-border payments have a lot of utility because they're unique to the African market and may not be relevant or applicable in other parts of the world. Now, all of these are examples of the uniqueness of the African market that African fintechs have been able to employ innovative approaches to solve. So let's summarize the lessons that global banks and fintechs can learn from African fintechs. The first is the customer-centric approach. African fintechs have been successful in creating customer-centric financial solutions that meet the specific needs of their target audience. Now, global banks can learn from this approach and work towards creating more personalized and tailored financial solution services. Next is the innovation in financial inclusion. African fintechs have been instrumental in increasing financial inclusion and empowering underserved populations without access to financial services. Global banks can learn from their innovations and work towards creating inclusive financial systems that benefit everyone. Next is the partnerships and collaborations. Now, African fintechs have leveraged partnerships and collaborations with banks, mobile network operators, and even other fintechs to create effective and scalable financial solutions like mobile money. Global banks can learn from these partnership models and collaborate with fintechs and other stakeholders to develop innovative solutions and services. Next is our agility and adaptability. Now, African fintechs have been able to quickly adapt to changing market conditions and consumer needs. Global banks need to be more agile and flexible in their approach to serving customers and addressing market challenges. Next is our ability to focus on financial education. Now, many African fintechs have placed a strong emphasis on financial education embedded in financial services and have been successful in helping customers understand complex financial products and services, even in a territory with low rates of literacy. Now, global banks can learn from this approach and invest in financial literacy initiatives to improve the customer's financial well-being and general understanding. Next is embracing digital wallets and mobile technology. Now, African fintechs have been at the forefront of digital wallets and mobile technology adoption and have been successful in reaching and attracting customers in remote and underserved areas who were previously unbanked. Now, global banks can learn from this success and invest in digital wallets and other mobile-first solutions that make banking more accessible to everyone and also helps those banks stay ahead of the curve. And finally, it's building trust and transparency. Now, African fintechs have been successful in building trust with their customers by being transparent and providing clear information about their products and services. Global banks can do the same by following this approach and focusing on building trust and transparency into their interactions with their customers. So friends, those are some of the lessons that global banks can learn from the uniqueness of African fintech. The African market is still evolving with new players constantly entering the space, and we can expect to see more growth and innovation in the space within the coming years. I hope you found this video valuable, and if you did, remember to hit the like button and leave me a comment. Have an amazing week, and I'll see you in the next video. Cheers, guys.